And if you had to look at, U.S. monetary policy the last 100 years, or some of the decisions they've made, like you said, when you have the option of printing money, it's almost like that saying, absolute power corrupts absolutely. It's almost like there doesn't have to be a bad guy. And you can say that Nixon was the bad guy in 71, or FDR was the bad guy in 33, or whatever, when they stopped necessarily reporting the gold pieces. Or you can say last year, the massive printing of money during pandemic, there was bad people that did that. But you shouldn't look at it that way, in your opinion. Is it just something that's going to be abused over time, and it's ultimately a system that's not going to be able to be stable? Or were there certain of those points where we actually accelerated this thing breaking?
So I would describe it as an inherently unstable system, but the speed with which it unravels can vary greatly based on individual decision points. And I mean, going back to the Nixon example, one thing I pointed out is that that system was doomed from the 60s. And so, basically it already broke essentially, and it was mark to market in 1971. And so Nixon was bad for all sorts of reasons, but that particular issue was, he was a small cog in that big machine that was set up all the way back in 1944 in the Bretton Woods system. And if I were to describe where I think in the modern era where central banking went wrong is probably under the Greenspan era, and because that's when central banking policy started shifting more towards Wall Street rather than Main Street, right? So you had, for example, long-term capital management blew up, and Greenspan cut interest rates, even though the employment situation was great, right? So basically, you did a rate cut just for the markets rather than real Main Street, and that arguably led to the dot-com bubble. It certainly fueled it among, it was one variable among many. And then in addition to the behaviors they did after the dot-com bubble, essentially led to the housing bubble. And so, we basically started a series of bubble formations. Whereas before that, they had a semi-stable environment. It's still an inherently unstable system, but it was being reasonably well managed. And so I would describe that kind of 90s period is where they could have made different choices that would have made the system more stable. And now I find that they're kind of in that Nixon situation where the table's already set, right? So people often ask what I would do if I was the Fed chair, and my answer is I'd resign. Because I don't know what Powell should do. I can list things he shouldn't do, but essentially they trap themselves in a corner. By constantly lowering rates, they allowed so much debt accumulation, because by lowering rates, a company can take out more debt and still be able to service it because the rates are so low. And the same thing for the government. And so when rates get that low, there's a ton of debt to GDP, and then they can never raise rates because it would blow everything up. Everything would go bankrupt. Unlike say the 70s, where Volcker was able to raise rates super high because debt as a percentage of GDP was very low. So it was painful to raise rates that high, but it didn't result in like every entity out there going insolvent. Whereas when debt is this high, that's what would happen if they raised rates to say above the inflation rate. So right now inflation is 6.2%. If they raise rates to 7%, the government would be paying trillions of dollars in annual interest. Vast, tons and tons of corporations would go bankrupt. And so they kind of trap themselves into that corner where they have to hold rates below the inflation rate and try to inflate that debt away. But that's how these fiat currency systems historically kind of start to unwind. And so they've kind of pushed this pretty as far as they can go, and now they're just doing damage control. And it's not a place I'd want to be in.
And so the last 18 months, they haven't had much of a choice than to lower rates and print just huge chunks of money. And then now once they do that, they're in an even worse situation.
Exactly. I mean, around the margins, there's things I would disagree with their actions. Like, I don't think they should buy corporate bonds. I don't think Japan should buy equities. Bank of Japan should buy equities. But the other thing is that they're essentially stuck. And it's something that a lot of people are surprised by what the central banks are doing. But for example, by looking at the long-term debt cycle, I was talking about this, over the past couple of years, this big disconnect between inflation and rates, and that we'd start to see some of these unusual policy actions because they've trapped themselves into a corner mathematically. There's too much debt for them to basically behave as you'd expect from the inflation levels.